Moving on with the second part here on fairbinaryoptions.com with our project trading binary options with the ultimate oscillator. Now this is the J4X trading platform, and the ultimate oscillator is to be found under the momentum indicators. Momentum indicators meaning that the oscillator is acting like price, but is taking into consideration bigger period or more candles than what the actual price shows. Now on the previous recording, or on the first part of this mini educational project, what we did was to edit a bit the indicator, and we said that it is traveling from the 0 level towards the 80, towards the 100 level, but most visited levels are the 30 area and of course the 70. This would be a nice range. And then we placed a horizontal line at the level, the 50 level. Now the 50 level is basically the middle of the range, and this middle of the range should be decisive in trading binary options. Now, how to interpret trading binary options with the ultimate oscillator? First of all, we are looking for a divergence. Now let's define what a divergence means. Well, a divergence means that price, for example, goes and makes a low, the oscillator goes and makes a low as well, and then price goes and makes another low, but the oscillator, it doesn't make another low. So that would be a bullish divergence, in the sense that one of the two, price or the oscillator, are lying, and we always should stay with the oscillator for the simple fact that it takes into account more candles than the classical price. Now in this case, for example, take a look at what price is doing here. Well, in this case we have a low basically here, so market goes to the downside. The oscillator is confirming this move to the downside here, like this, and then the oscillator rises and makes not, it doesn't make a new low, while price makes a new low. One of the two is lying. We always stick with the oscillator, and the oscillator shows here a bullish divergence. What does it mean, a bullish divergence? Well, the oscillator is between the same 2 points. The oscillator is rising. Let's make this one a bit bigger, like this. And if you look at the price, between the same 2 points, price is falling. Therefore, this is being called a bullish divergence, and what we need to do is to wait for the oscillator to violate the 50 level. So wait for the 50 level, and by the time it moves back here into this area, we should like to go and buy call options on a revisiting. So breaking, and here is where we buy call options. So breaking, and here is where we buy call options. Now on binary options, it's not only that only to let's say identify the direction that the market is going to go, but also to put the expiration date, because you may be right in price going up or down, but if the expiration date is not good enough, then the option will expire out of the money. We don't want that, and we should take into account the time frame that the oscillator is being placed on. This is the 1 hour chart. So on the hourly chart, what I'm looking for here is a move now to the upside, and you may choose any kind of expiration date on the hourly chart depending on the time, on the moment of time during the trading day this divergence happens. You may go and trade end of day expiration date, even hourly or 2 hours. Of course, you're not trading 5 minutes or 60 seconds if your analysis is being made on the 1 hour chart, because it simply doesn't make any sense. And then moving on, we see what? We see here the price forms, here a high, and then price forms a new high, but the oscillator doesn't confirm that. So the oscillator goes and makes here a high, but for the new spike higher, the oscillator actually goes and makes a lower high, and this is being called the bearish divergence, in the sense that here we have the oscillator showing decreasing values while price shows increasing values. We wait for the oscillator to break the 50, and then on a re-break, this is a nice moment or place where we should go short, or where we should go and buy put options, as this market should move to the downside, simply based on divergences and on the fact that one of the two is lying, and usually the price is lying. It is quite a simple strategy, and you only need to get used to the idea that binary options are nothing but regular trading, only to apply a different expiration date. Thank you, and bye bye.